Good day to you, ladies and gentlemen. This is Charles Sells with PIP Group. Today we're going to be discussing bank foreclosures and the foreclosures we do in Georgia, South Carolina, and North Carolina, why we've chosen those areas for our investments, as well as provide you some examples of what we're doing right now. I would like to point out that as you look at some of these examples, some of our other investments that are property related, i.e. hybrid deeds or secondary market tax lien foreclosures, could fall into the same kind of category, if you will. You'll be able to sort of visualize what those type of returns could be, as well as the bank foreclosures. Bank foreclosures is simply just a quicker end to the process, because we get the deeds within 3 months, we do the repairs, and we turn them around, we get them resold. And when you're talking about secondary market tax liens, you get them for a lot less than what you're going to buy a bank foreclosure for, but then you need to start considering time value of money, that sort of thing, which is going to be more profitable for you, going through a secondary market tax lien and doing the foreclosure, or letting the bank do it for you and picking it up at a live auction that way. So let's go ahead and get started. Okay, so let's just jump right in here. Here we have an example of a property that was going to be involved in a live auction, or is involved in a live auction, with an opening bid of $35,000. That's the opening bid. Obviously, that's not what's going to be paid for the property. When we get in there, we want to take a look at a lot of things. And when I say in there, I mean into the history of the property. I don't actually mean physically into the property. The tricky thing about what we do is you have to take into consideration some variables, such as, is the outside trash? On this circumstance, no, it's not. So we can assume the inside's not going to be that bad either. Likely it's going to need some paint, it's going to need new floors, maybe update some fixtures. Really depends when we get in there, but it's something that you always have to take into consideration when you're doing these deals. Other consideration is it still occupied? If it's occupied, that can be absolutely just fine. We buy those all the time. But you need to take into consideration, are you going to have to do an eviction? Or how many times are you going to have to go to court with these folks to get them out? There's a lot of things that you need to take into consideration as you're looking at this. As I look at this picture right here, I can say when we get inside this property, it's probably going to need around $10,000 worth of repairs, new appliances. That's just kind of the going average when we see the outside actually looks pretty good, and in this type of neighborhood, what we can expect to see once we get inside. So you guys, you can see on this one, the winning bid was $64,501. As a client of ours, or if you look through our examples, and we'll actually see some here in a couple of slides down the way, we will actually bid $1 over the last bid. From our experience, we have learned very well how to predict what somebody's threshold is going to be, whether the tempo of the bidding slows down, whether they drop from $1,000 per bid down to 50, down to 10, down to 1. We have an idea what the threshold is, and we don't want to spend more than $1 above that threshold, as long as it meets our max bid requirements. So on this particular property, $64,501 is what won the bid at auction. If you've done even the smallest amount of research and due diligence on this investment, or even if you're somewhat of a savvy investor, you've heard the term ARV. For those of us that are pretty heavy in the industry, there's a lot of different acronyms for ARV, but essentially it stands for after repair value. In this circumstance, PIP's after repair value is $109,000. Now, keep into consideration the county and appraisals put this property at about $124,000. One of the reasons we're able to be so successful is that our bidding and our max bids are very conservative. So we want to always be under what we think we should spend. And we also want to give our valuations to be under what we think we can sell for. That way we can do quick sales, we can actually bump it up a little bit, massage the expectations of our clients a little bit. It's why we've done so well, because we've never tried to exaggerate the numbers. So we have an after repair value on this particular property of $109,000. Repairs inside required new appliances, new carpet, new paint, as we suspected, some upgrades but very minor. We're talking things like switching out brass cabinet hardware for nickel finish or chrome, little things like that. So not too bad on the repairs. So we've got an ARV of $109,000. Our total investment into this was right at about $72,000, including PIP fees. So this one hasn't sold yet. But keep an eye on it. We post everything on our website, on our videos, and we'll see what this one actually sells for. But investment of $72,000. Turn it around in 3 to 4 months. This one took about 4.5 to get it on the market. Now we're looking at $109,000 in the resale of this particular property. That's right on target where we want to be. So where do we buy these bank foreclosures? Well, again, secondary market's always going to be Illinois, so take that into consideration. Those are all over the state. But when it comes to the bank foreclosures, we do actually focus on a very specific area or very specific targets. And the targets do change as the economy changes. We do make adjustments. We test certain markets, and we bring those markets to the availability of our investors. So we are going to be very specific on where we place funds. I was at a conference not that long ago, and I was sitting on a panel, and the discussion was about what are we seeing in the markets today? Are you seeing more inventory, or are you seeing less inventory? Are you seeing more competition, or are you seeing less competition? And I literally, the gentleman, young guy, thought I was just talking people's ears off, because I said in my experience, what we're doing is we're actually seeing more inventory and less competition. I know that sounds crazy, but it's the way we've always done our business. We got started in Illinois, doing tax sales in Illinois. Did we go to Cook County? No way, because you'd have 1,000 people attending that sale, and they'd bid it down to 0% or 1% or 2%. There's no way to be successful at those numbers. So we always went to the outer lying auctions. We cover over 90 auctions in the state of Illinois, and that's why we're successful in the state of Illinois with tax liens, because we're spread out. We're not going to the auctions where the big guys are going. We're staying in good, high-performing areas where nobody else wants to go. They just don't want to drive. They don't want to be there. When it comes to hedge funds, they don't have the resources to spend the money to do the due diligence in order to place in those small sales. They need to go get one big hit on one day. When you work with the smaller guys like us, and we are considered kind of a big guy in that industry, you're able to really spread the wealth, if you will, or spread the activity. So we focus on those kind of areas. We're not in Dallas, Texas, where you've got 500 bidders all going after the same bank foreclosures. We're in Savannah, Georgia. Yes, it's a great city, but we're competing with 6, 7 other what I would call qualified bidders. That is, they're there every single month, rather than the onesie twosie guys. So we're always going to be in those type of markets that are very well at performing, but none of the big guys are in them. So right now we're in Georgia, North Carolina, and South Carolina. That's where the primary most of our bank foreclosure activity is. Why are we in those areas? There's a number of different reasons why we're in those areas. One's we have a really good grasp of that particular area. Before investments become available to our clients, PIP has already tested the waters, if you will. We've already kind of vetted out our teams in the area, and we're confident it's going to be a good investment opportunity for our clients. The other why is, again, let's use Detroit as an example. That's a big city. Obviously, there's a whole lot that you could buy distressed up there right now. But what killed it in the first place? Unions and manufacturing. We don't want to be in those big cities where they could take a big kick in the teeth if there's a situation with the economy that doesn't work. Where we want to be, We want to be in places where there's a lot of colleges. We invest in our investments in in North Carolina. Between two cities, there's 16 colleges that include Wake Forest and Elon University. If the economy goes bad, the economy goes bad. But we're in areas where there's a lot of colleges, or there's a lot of not industry, but there's a lot of other factors that make it attractive. It's not supported by only one industry or one business. In even the worst of economies, colleges still did very well. So those are the kind of areas that we're looking for. In South Carolina, we're near Paris Island in Beaufort County. Obviously, people are gonna in a bad economy there's gonna be more military. So we're focusing on those kind of areas. Savannah, Georgia, has been one of the top 10 family destinations for the last 12 years in the world, not just the U.S. Hilton Head Island was ranked #1 this year. We don't do a lot of Hilton Head Island, but we do a lot around Hilton Head Island. So we're staying in areas where there's a lot of schools, a lot of colleges, a lot of other things to support the economy rather than a single business or a single industry. And I'll give you a great example. We used to be heavy investors in Peoria County, Illinois. Essentially, the entire area was supported by the CAT manufacturing. That is the heavy equipment company that makes the earth movers and that sort of thing. CAT closed down that factory, and with it they essentially closed down that town. So we want to make sure that when we're investing, we're staying out of those areas. We also want to make sure we're staying out of areas where a lot of hedge fund money or what we call institutional money is going. So rather than being in Charlotte, we're an hour and a half up the road in Oak Ridge or Greensboro or Winston-Salem. Same goes for Atlanta. We're not in Atlanta. We tried to be in Atlanta, but there's too much competition. The bidding gets so out of control that people are paying market for foreclosure, which is just absolutely ludicrous. So anytime we invest, we are not going to be in big cities. We're not going to be in Dallas. We're not going to be in Atlanta. We're not going to be in Houston. We'll be in the outer skirts of those cities, but we're not going to be in the main city. So right now we're in Augusta. We're in all of Beaufort County, South Carolina. We're in Savannah, Georgia. We're in Greensboro and Winston-Salem, some other outer lining areas in North Carolina. So that's where we're always going to. Okay, so now let's talk about the what we buy. What we buy is going to be what 95% of Americans can afford. At that same conference, on that same panel, I was talking to you about where the guy looked at me like I was just nuts, saying our inventory was higher and our competition was lower. They specifically invested in what they considered low-risk properties, high-end, low-risk. That sounds like an oxymoron to me from my business, because if you're investing in a property that's $350,000, $400,000, you've got one exit strategy and nothing else. If the bottom falls out of the economy, you're in trouble. You're also buying properties that only fit a very specific demographic, but not only do they only fit a specific demographic, that you're shrinking who is actually going to want all the neat little fixtures and stuff you put in that property. I mean, let's face it, all of us as homeowners, we want it to make it our own. So in order to find something that's readily available and done that is our own and fits our personality, you're really scaling yourself to a very specific crowd that is going to invest in those properties. So what we invest in is multiple exit strategy property. So let's go through one. So as I said, we buy homes with multiple profit generators. There's always going to be more than one way out of it, and it's always going to be a home that is available to 95% of Americans. The folks that can afford these, first-time home buyers, good cash flows, good owner finance opportunities. So this is what we buy. This is the bread and butter. We don't go way off into the extreme and buy $350,000 pieces of real estate, single family homes, because we know we just limited ourselves to a very, very specific audience. And we never want to do that. Regardless what happens with the economy, we always want to be a step ahead of the game. So if the bottom falls out tomorrow and none of us knows about it, we can cash flow this thing and rent it out. And it's still going to provide very good returns for our investor. Fix and flip, it's going to be good. So let's go take a look at this. All right, as a fix and flip, we got in and we got out pretty quick. As you can see, the color was, honestly, the pictures don't show it to be as bad as it really was, but the house was green, green, green. You can see a palm tree back there on the back left side. This is actually butted up right to Savannah's low country. It's on marshland, so it hadn't, I imagine it probably hadn't been washed on the outside in probably 5 years, because it was just green, very green. Regardless, the purchase price on this was $84,000. We did have to put a lot of repairs into this. We actually essentially had to redo everything on the interior. However, we've got it sold for, or excuse me, we've got it listed right now for $169,900. So that's a gross profit if we're able to sell it for the list price of 32% on a fix and flip. With our fix and flips, if it's a bank foreclosure, it takes us about 3 months just to get the deed. So we say your total investment is going to be about 6 to 9 months. It can push past 9 months, but by the time we get to month 7, we're sweating a little bit. So we're doing a lot of things behind the scenes to try and make those sales come in a little faster. This one's only been on the market as of this broadcast about 60 days. But again, we post everything online. It might be sold by now, by the time you're watching this, so you can probably find the results of the before, during, and after pictures of this project, as well as what the final profits ended up being on this particular investment. So we're talking about multiple exit strategies again, right? So here we are if it were to be a cash flow rental. Same numbers, $84,000 purchase, $31,360 in repairs. The gross annual cash on cash, that's the COC, is $16,200, or a gross annual profit, that's take home, of 14%. That's pretty darn good on a rent roll cash flow investment. The national average says that if you're making 8%, you are doing phenomenal. So this one's doing 14%. And quite honestly, I tell all our prospects and our clients, if we can't do 15%, we're doing something wrong. In this particular circumstance, we paid a little bit too much for the repairs. So what we'll end up doing, if this investor were to cash flow this, we would essentially just waive some fees or eat some of those repairs. So we're at least 15%. So that is something important to remember. We just came out with the new 16% performance promise, which essentially means that if we can't get you 16% one way or the other, you don't pay us any fees. Granted, there can be some circumstances that are completely out of our control. If we've got a dispute going on with an eviction, something like that that's really dragging out the time, we still want to say that we've done enough due diligence on our part to be able to get you 16%, or you're paying us nothing. Fortunately, we have not had to engage that new policy yet. Okay, and finally, it can be owner financed through HOPE. Now, a lot of you I know are saying, "Oh, but what about Dodd-Frank?" I'm not a a PhD on the whole Dodd-Frank thing, but I can tell you it's never become an issue. Some folks think it's a bit of a scare tactic. There's obviously a lot of ways that you can do things the right way, and Dodd-Frank does not need to be a consideration when you're talking about doing owner financing through HOPE. And we're going to show you why HOPE is so awesome. I am really, really excited about it. It's a brand new program for us. I think it's going to absolutely positively be our #1 opportunity for both investors and homeowners alike. and I'm really going to be pushing our investors and our staff to get behind Hope, because it's going to be fantastic. So again, here we're looking at an owner finance package. The sales price on this, we discounted it by $5,000, almost $6,000. The interest on this, because it is part of Hope, is going to be $58,605 over the period of 3 years. So it's going to give you a cash on cash of $107,245, or a gross annual profit of 13.9% over a 3-year period. So let's get into the details of what Hope is. It's really easy for everyone to kind of understand. Okay, I can cash flow this. I can fix and flip this. What's this Hope stuff you're talking about? So let's get into the real details of what Hope is. Okay, so now you're asking yourself, what is Hope? Hope is what we call the homeowner preparation experience. And it is an experience. Essentially what we do is we do owner financing, but it's owner financing on steroids with a lot of protections in place as well. Essentially what we're trying to do is we're trying to qualify folks who normally wouldn't be able to get a mortgage on a property or even buy a home. We are working with them on a number of different levels to get them qualified so they can get a traditional mortgage on the property. We're not going to talk about that a lot here, but there is another broadcast which is labeled Hope, which gets into the details of how Hope works. And I encourage everybody to go watch it because it is a really neat program and it is unique to us, but it is a little complex in how it works. But in the end, what we're doing is we're helping people get back into homes that may have lost them or whatnot. And we really share some details that are pretty interesting that I actually didn't really know until we started really digging into the Hope program and the Hope structure with how everything works. So go take a look at the Hope broadcast, and I think you'll find the investment to be very interesting, very profitable, but also very rewarding to yourself and to a family or somebody who has been homeless or can't afford to purchase their own home or doesn't have the credit to buy their own home, essentially, which is unfortunately most of Americans. Okay, so whether it's fix and flip, cash flow, or it's part of the Hope project, activity this month. This is what we've bought in Georgia and North Carolina this month. I'm not going to say what month it is because that's going to really date my slides, and these take time, and I'd like for this presentation to last at least 6 months. I will state that we had a great month. The next time I do this presentation, it shouldn't show that the net client forecast is going to be 40%. Our averages are going to be north of 20%. However, this month was phenomenal. So when you look at the purchase prices, and for those of you in California that are going, there's no way you can buy anything but a postage stamp for $44,000. Just remember, we're talking about different parts of the country. We're talking apples versus oranges here. So if you look at these, our purchase prices are fairly low, and this is typical of everything we buy. Everything. Again, we're going back to that exit strategy. We have 3 different ways that we're going to make money. If we can't sell it because of circumstances that we're unaware of, it's going to rent really well. So that's what we buy, is multiple exit strategies. And then we also obviously have investors that like to diversify. They want to have some fix and flips. They want to have some cash flows, long-term holds. So this enables us to have a nice, good, soft cushion for everybody to land on. And that's why we invest in the properties we invest into. As I mentioned before, deeds usually take 45 to 90 days. Repairs take about 3 weeks after the deeds are received. Granted, there are always going to be circumstances that once we start ripping down a wall or peeling back the onion, if you will, we're going to find some things that we have to take care of. A lot of the times, those can be things that require permitting or require an inspection before we can move forward, and there's nothing we can do about those circumstances. I'm dealing with one right now. We've had the electrical done for almost a month and a half now. The client is not upset, but getting antsy as I am, because all we're trying to do is get the city inspector over there to approve what we're doing so we can continue with the project, and it's like pulling teeth to get it done. So just keep in mind, we have a very good record, we have a very good reputation of keeping things moving fast and forward, but there are occasions when we're going to get bogged down from time to time. Okay, so now you're saying to yourself, okay, I've looked at those prices, holy smokes, those numbers look great. I can't imagine what you must be buying for those kind of prices. It must look like all these pictures that I'm seeing on your slide now. Those absolutely cannot be profitable opportunities. Well, this is what it looks like almost every time we go into any property. When they leave, they're not happy about leaving, and they don't care who's got to clean up the mess. Looking at this picture, we're looking at three different properties within the same month, and this is absolutely normal for us. There you see a picture of me actually taking a selfie, getting ready to walk into one. I don't always wear a respirator when I go into a property, but yes, there are times that I 100% absolutely will, based on what it looks like when we pull up on it, as well as what it smells like when we rip open the boarded door. So this is very typical of what we're doing. Again, on our website you have examples that will be constantly updated. Our website is brand new as of this presentation, so you might not see much now, but we plan to put every single project on our website with before, during, and after pictures to include what the performance of that investment was. Proof's in the pudding, folks, so we want to make sure everybody sees that it's up to date. A lot of our competitors say, hey, look at this great deal I did, and it says 2014. If I do a live presentation, I don't use anything that is not newer than 6 months. So if I'm doing a presentation on tax liens, all the examples I'm giving are going to be recent. If I'm doing a presentation on fix and flips, everything is going to be very recent. So as you continue to follow us and continue to learn more about us, just keep that in mind, that everything we do, there will be a video or at least some before and after pictures of what's going on. So let's take a look exactly at what we're buying, what we bought this month that has such great performance that we think the forecasted net return to the client is going to be 40%. And I would like to say again, our averages to the client are 20 to 24. So when you become an investor, do you have the potential to make 40%? Yes, you do. But don't make that your bottom line expectation. Okay, so very quickly we're going to flip through these slides. If you want to go back to the slide that shows the purchase price, forecasted repairs, forecasted list price, sale price, by all means you can do that, or you can see how this all plays out through history as these are listed and sold. So let's get through these very quick. Augusta, Georgia. We purchased this gorgeous home. This one is absolutely 100% a home run for us, and we don't get those often, but we purchased it for $81,700, and there you go again, $701. So we bid $1 over. Repairs as of today, because these are all brand new acquisitions, are $30,000. We're almost done with it, as you can see, but we do still have to do some finishing work on the floors and order the appliances, so we'll probably be close to $35,000 in repairs on this particular opportunity. Winston-Salem, North Carolina. Looks pretty rough on the outside, more or less immaculate on the inside. We're expecting repairs to be about $20,000. The purchase price was $57,806. This sits on 2.5 acres of land. It's a great single-family home. Great opportunity. First-time home buyers. That's the kind of bread and butter we're looking for. So that's traditionally what we do. This one, little weird looking, absolutely. This one will be a fun one to watch because what we bought it for is actually what we expect to spend in repairs on it. This one has a lot of character, a lot of potential. It sits on 5 acres in Savannah, Georgia, which is unheard of. And in addition to that, it's got a huge pond. So we will be cleaning that pond up. We'll be restocking it. We'll probably be putting a new front door in this place because it's an odd-looking property. So this will be a fun one to watch. Nonetheless, we expect to have $120,000 into this one. We expect to sell it north of $200,000. If we did nothing but cleaned up the landscape right now and did nothing else to the property, just left it the way it is and kind of cleaned up inside, put a little paint on it, our agent, who is very good, has essentially said we can sell it for $180,000. The investor and I would like to kind of play around with it a little bit. So that's what we're going to do, and we're going to fix it up, and we'll see if we can squeeze a little more percentage out of it. But this one is fairly unique because it is a unique property. It goes a little bit against what I said in the beginning, and that is it's going to require a special buyer that is interested in this particular property. But the prices are right. We're not talking about a $400,000 piece of property. It could be that one day, but that's not what we're going to sell it for. So, it still qualifies as a first-time home buyer home. Up in Greensboro, North Carolina, we're looking at this property. Purchase price was $44,000. Repairs, we're saying $25,000. I'm getting into this one tomorrow, as a matter of fact. And I've seen some water damage. I think we're probably going to be looking a little north of that. But again, go back to the slide that we show you the potential resale value. And you'll see how we're gonna do on this one. This one here is in Savannah, Georgia. I will say that we probably paid a little bit too much for this one, but we're still going to hit our margins. So that's all that matters. We're going to have about $16,500 in repairs. It doesn't need a whole lot. When you see the before photos of it, or if you watch the video of it once it's available, you're going to look at those before pictures and say, no way you're getting out of here with $16,500. We'll come close. The biggie in the house is going to be where the garage used to be. It's a huge room. It's got a lot of potential. It's going to be the selling point of the house. As long as we don't have any problems with the windows, because they are older windows, original to the house, we'll come out of there at $16,500. This one we haven't been inside yet. You can see that the folks that were foreclosed on were actually nicer than most, so we expect we're going to get in here and find things that are going to be fairly simple. Looking at about $9,300 for carpet and paint and new appliances. We'll put stainless steel in there. We put stainless steel in everything until stainless steel prices go back up. Right now you can buy stainless steel for about what you can buy a white set or a black set for. So we spend a little bit extra to make it look a lot nicer. But this one will turn very quickly. It's in a very nice location. It's a corner lot. We haven't decided whether we want to fence it in because obviously that costs money. But keep an eye on this one. It should be interesting to watch it transpire. We did spend a little more than I would have liked to on this particular property, but we'll still hit our margins in the long term. This one's fantastic. It's going to be a quick turn for us once we get the deed for it. As of today, we do not have the deed. We've got a purchase price of $72,000. I have walked through this property, and it is more or less in very good shape. We've got a water situation we have to take care of, drainage really, but that won't be too difficult. Some gutters and proper French drains, and we'll be all set here. So, to the untrained eye, it looks like this is going to need a lot. It doesn't. It needs paint. It needs some new appliances. It's got good floors in it, and it has a basement drainage problem that we will take care of. We'll get that smell out of it. We'll get that mold out of it. It's not going to require a lot of repairs, and we will resell this one for considerably more than we'll have into it. So there you go. I appreciate the opportunity to share with you our bank foreclosures in Georgia, South Carolina, and North Carolina. Keep an eye on these properties and take a look at everything else we have on our website, because I do intend from this day forward to provide before, during, and after pictures of everything we do, the numbers that we're hitting, and even the ones where we may not hit them. And what I'll do is I'll provide you the reasons for such. So thank you again, and have a great day.